Hello and welcome. In this video, we will learn about primary and secondary markets. Okay? From the previous video, we know that an IPO or an initial public offering is the first time a company issues shares to the public. Okay? It is the first time a company issues shares to the public. Alright? Now, connected to this is the topic that we will be learning in this video. Alright? And to understand that, I am going to take an example. Alright? Yes. Now, these are farmers. And they grow vegetables and fruits. And after they are done with the harvesting of vegetables and fruits, they need to sell it. Correct? They need to sell it so that they can earn money which can be used for next crop. Now, these farmers do not sell it directly to people like you and me. Right? So, we do not directly buy these things from the farmers. So, what do the farmers do? They go to the middleman. They sell their produce to middleman. Now, who is this middleman? This person is someone who has lots of money and can buy the fruits and vegetables in bulk. Okay? Now, people like you and me, how much can we buy from the farmers? Right? So, we can buy 2 kg, 3 kg, 4, 5 kg, that's all. Above 5 kg, it is of no use to us. But the middlemen, they buy tons or quintals, or I can say thousands of kgs of vegetables and fruits from the farmers. In the same way, malls, alright, malls or shopping complexes buy the fruits and vegetables in bulk from the farmers. The farmers have grown thousands of kgs of produce and they need to sell them all. And the only way to do that is to sell it to middlemen or malls. Okay? And this is called as primary market. This is called as primary market. They do not sell it to customers like you and me. They sell it to someone who has lots of money and who will buy the produce in large quantities. Okay? Now, what do the malls do or what do these middlemen do? The middleman sells or supplies the fruits and vegetables to various shops in various cities. Or maybe the middleman has his own shop, and he sells vegetables there. People like you and me, we want the vegetables in limited quantity. Correct? 1 kg, half kg, 2 kg, whatever the quantity may be, it is limited. We go to the shops or we go to the malls and buy the vegetable in the required quantity. Correct? So, the farmers sell their produce to these big players or those who have big amount of money, large amount of money, and those who can buy in large quantity. And we go and buy from them. Correct? So, this is secondary market. Alright? So, now apply the same concept that I have explained for stock market also. Alright? We'll see that now. The friends from our example, what did they do? They split the company into many shares. Correct? And they decided to sell some part of the shares to the public, and they go for an IPO or initial public offering, right? So that is what we had learnt in the previous video. Now, these friends do not sell the shares directly to people like you and me, because we are small players, correct? So through the initial public offering, what they do is they offer it to people who have lots of money and those who buy shares in bulk quantity. Okay. Now these are individual, high net worth individual. These are individual who have lots of money and who buy lots of shares. And there are also financial institutions which buy the shares from companies in bulk. Okay. So these promoters want to sell all of their shares, correct? All of their shares. And they want amount in huge quantity. People like you and me will not be able to buy lots of shares. Of course, if everyone comes and buys, it is possible, but it takes time. Correct? So that is why they sell or offer it to financial institutions and people, individuals with lot of money. So in IPO, this is what happens. The shares or new things are created for the first time and offered to these people or institutions, and this is primary market. Okay, so just like the farmers sell their vegetables to malls and middlemen, or the ones who have lots of money, the promoters offer it to those who have lots of money and who can buy in bulk. Okay, and this is under primary market. This falls under primary market. Okay, and what do? People like you and me, we buy from these. Okay, we buy from them through a stock exchange. Okay, so this is a stock exchange, and you know what a stock exchange is, right? So we buy shares from these through stock exchange, and this is called as secondary market. So a primary market is where stocks or new securities are created and offered to the public for the very first time. Secondary market is where we, people like you and me, buy or sell shares. Alright, retail investors. So basically, when we say we are investing money in the stock market, people like you and me, when we say that, it means that we are buying or selling shares which has already been bought by others. Okay, so we are not buying it from the company. So someone has bought it from the company and we are buying it from them through the exchanges. Alright, so just know that we are trading or investing in secondary market or through secondary market. Alright, now I have put it in simple words so that you are able to understand it. Okay, there are many things to explain here which I have not done. So as you proceed, you will be able to understand it on your own. Alright, now this is the primary market, correct? This is the primary market, and I told you that the promoters offer the shares to big players. Now the question comes, can't people like you and me buy shares from them directly? Of course we can. We can apply for an IPO or to buy shares directly, but generally we do not get it. Okay, so the financial institutions and the investors, okay, high net worth individuals or people who have lot of money, they buy all the shares from the companies. Okay, if there is anything left out, or in other words, if these do not buy all the shares from a company, then people like you and me can buy them. Otherwise, we do not get a chance to buy them directly from the promoters or from the company. Okay? Yes. Now, I had given you the example of primary market, right? So, farmers sell their produce to middlemen and malls. Now, there is an entity, government entity, which makes sure that these do not cheat the farmers, okay, or these do not cheat us too, okay. So the promoters and the investors both should not be cheated, correct? And to regulate this or to make sure that no one is cheated, we have government entities, all right? And SEBI, Securities and Exchange Board of India, is the government entity of India which makes sure that no one is cheated in trading, okay. And in America we have SEC, okay, Securities and Exchange Commission. Their role is to make sure that everything goes smoothly and no one is cheated, in simple words, okay. So that is all you need to know about IPO, primary market, secondary market and SEBI. Alright, so I hope you have understood. I'll see you in the next video with new terminologies. Till then, take care and thank you for watching.